Hi dear friends, today is Friday, February 14. As usual, we discuss the charts for the euro and the British pound and figure out their further moves. The euro was challenged by the US inflation data, factory inflation data, and well-balanced unemployment claims. Euro buyers overcame fears over Donald Trump's threats to expand trade tariffs. Eventually, buyers of risky assets regained confidence. Overall, market sentiment improved because of progress in the resolution of the geopolitical conflict between Ukraine and Russia. Markets welcomed Washington's efforts to arrange the talks. As a result, both the euro and the sterling extended their growth against the greenback. Yesterday, President Trump ordered his administration to prepare another package of tariffs affecting almost all countries. So the world is braced for a broader trade war. On Thursday, the president signed an executive order to authorize the commerce minister to suggest new trade tariffs on particular countries. The comprehensive package of tariffs should be submitted by April 1. Nothing serious is expected until the date. That is why the euro responded with a rally. Besides, Trump warned yesterday that he could introduce tariffs on all imported cars. Experts estimate that such tariffs threaten a trade route worth more than $200 billion. That is how Trump tries to protect domestic car manufacturers. No wonder. Meanwhile, overseas cars account for almost half of the American car market. 65% of imported cars are Hyundai and Kia. All in all, Donald Trump's measures are justified. Before discussing the charts, let's look at the economic calendar. Traders will get to know the Eurozone's GDP data for the fourth quarter. Analysts estimate a flat reading significantly. The annual GDP rate is expected at 0.9%, decent growth. With such economic growth, the ECB delivers the message about further monetary easing. So more rate cuts are needed to bolster economic growth. Another report is unemployment in Eurozone, which is likely to be soft in the fourth quarter. This might limit the euro's rally. The highlight of today is US retail sales data. Retail trade in the US is expected to fall by 0.2% in January from a 0.4% rise in December. This data, alongside a decline in industrial production, could weigh down on the US dollar. However, a slowdown in retail sales will push inflation down. Recently, inflation has been accelerating in the US, causing a headache to the Federal Reserve. Now let's speak about the technical picture. The 1-hour chart shows that the euro pair rebounded to 1.0468, the high of January 30. In case of a false breakout in the first half of the day after weak Eurozone GDP data, it is an entry point for short positions. The target is 1.0424. If broken, the main target will be 0.376. I will plan long positions from that level. I doubt the price could sink below the level. When I go long, the first target will be 0.424. If the bears are not active at 0.468 and the bullish trend is expanded, I will plan sell positions at 0.495 and 0.468 on the condition of a false breakout, bearing in mind a 30-35 pips drop. As for the British pound, I consider 1.2568 an entry point for sell positions. If the instrument fails to consolidate above the level, it will fall to 25.26. A breakout at this level with the opposite test will intensify pressure and push the instrument down to 1.2480 and perhaps to 24.34. If so, I will consider long positions, assuming a 35-40 pips bounce. I will plan long positions during a dip at 1.2526 in case of a false breakout. The bullish target will be 25.68. If the bears do not enter the market here, the door will open to 26.04 and 26.38, where I will plan sell positions during a bounce, assuming a 30-35 pips drop. Good luck and have a nice weekend.